Hello and welcome to Money Markets and More with me, Dominic Frisby, coming to you today from the streets of Rye, beautiful Rye on the south coast of England. We're going to talk gold today. A couple of weeks ago it printed its highest ever weekly close. What do new highs usually lead to? More new highs? Is it too late to buy gold? No, I don't think so. Should you own some? Yes, everyone should own some gold. Put 5% of your net worth into gold and hope it doesn't go up. That's the old Wall Street adage that I'm forever quoting, and I quote it again today. It's such a good wisdom. Put 5% of your net worth in gold and hope it doesn't go up. I'm sorry if I'm a bit awkward. I'm walking on these cobblestones, and so they make me kind of do that. But anyway, I just wanted to share my latest thoughts on gold and the great unravelling of fiat. Now, for the record, gold's all-time high was 2089, and that came in August 2020 after the sort of COVID money printing bonanza. If we get up above that level, there really will be a lot of noise. And as long-term viewers of this channel, or should I say long-term sufferers, will know, I've been whittering on about de-dollarization since more or less the dawn of time, but the de-dollarization narrative really seems to have taken hold over the last couple of weeks and months. The French president, Emmanuel Macron, he was in China a couple of weeks ago, and he said to President Xi, "I want to take the opportunity to insist on one point. We should not depend on the extraterritoriality of the US dollar." Now, we can quibble over whether extraterritoriality is even a word, but the gist of his statement is pretty clear, and it comes on the back of deals that China's made recently with Russia, Brazil, Saudi Arabia, South America, Argentina, to bypass the dollar and trade using the Chinese yuan. And then there was the Russian Davos, the St. Petersburg International Economic Forum. There was a summit in New Delhi a fortnight ago, and Russia's State Duma Deputy Chairman Alexander Babakov, he said that a BRICS alliance was working on a new currency secured by gold and other commodities, including rare earth elements. Tucker Carlson, one of his final monologues was an impassioned monologue on the subject of gold, subject of de-dollarization, and that went viral. It garnered millions of views. If you want the rest of the world to trust your currency, the last thing you would do is use it as a weapon or print too much of it, he said. He's making a fair point, but if Mitch McConnell and Joe Biden, the rest of these reckless leaders, have their way, an increasing number of countries will do what so many have already done, which is begin to reject the US dollar. And what will happen then? Well, all those dollars will come home, he says, and the value of our currency will plummet even further, and that will lead to poverty across the United States, and that will lead to the typical political and cultural volatility that inevitably follows economic collapse, disaster, and we've seen it before. It's classic gold bug erotica. He even cited the fact that nobody knows how much gold is in Fort Knox because none of it has been, because it hasn't been audited for generations. Even Elon Musk has been tweeting about de-dollarization and exporting inflation and the likelihood of bank runs accelerating. Now, I must say I get a little concerned as narratives mature. The more widespread and well-formed the story, the more likely it is to run out of steam, and gold has run out of steam a little bit in the last couple of weeks. But that said, the broader trend is strong and it is up. Another concern I have about this move is the woeful relative performance of the gold miners. In a trusty bull market, you want to see the miners leading the gold price higher. They are doing no such thing. The juniors, as measured by benchmark ETF GDXJ, they're a good 35% off their 2020 highs and a quite astounding 70% off their 2011 highs at the climax of the last bull market. And one explanation for this is that their input costs, energy and equipment, salaries, what they have to pay their staff, that's rising faster than the gold price is rising, and so that impacts their profitability. But even so, you want to see the miners behaving better than this. Maybe a breakout to new highs will give them the boost they need. Maybe they're forecasting a correction. But either way, you cannot argue with the fact that they are cheap. Doesn't mean they can't get cheaper. I've spoken before about bearer assets, assets that are nobody's liability. Gold is the most famous example. It's existed since before the solar system was formed, and it will exist long after the human race has shuffled off this mortal coil. It is nature's money, a child of God, according to an ancient Greek lyric. Neither moth nor rust devoureth it. Spandau Ballet went with the rather more catchy, it's indestructible. Money is gold and nothing else, the financier J.P. Morgan once said, and this is one of the most misquoted lines on the internet, and I'm actually quoting him correctly. Everything else, as James Turk argues in his latest book, Money and Liberty, be it dollar, pound, silver, crypto, even the mackerel that sometimes changes hands in American prisons, is currency. Most currency is credit. Money in the bank, as few seem to realise, is credit, and that's why gold sits at the top of the hierarchy of financial instruments, as we see from this slide from analyst Jan Neuenhaus. And in the same article, in which Jan makes a case for $88,000 gold, he presents international reserves, and you can see how central banks have been increasing their reserves since the financial crisis of 2008. You can also see that accumulation has accelerated this past year, when central banks have been buying gold at the fastest rate since the 1960s. Perhaps more significantly, it's not just international gold reserves that are increasing, but since 2018, gold reserves relative to other assets have also turned up. We're nowhere near the Belle Epoque levels where this chart begins, but the fact that we have turned up is, I think, significant. What is being planned? Moreover, all that data assumes that China has been transparent about its gold holdings, which it has not been. China's gold holdings have, as I've argued many times, they're probably 10 times higher than they say they are. I keep saying it. We are in interesting times. Own some gold and hope it doesn't go up. And if you're interested in investing in gold, I'll link to my guide in the description. My current recommended bullion dealer is the Pure Gold Company, whether you're taking delivery or storing online. Premiums are low, quality of service is high. They deliver to the UK, to the US, Canada, Europe, or you can store your gold with them, and I have an affiliation deal with them. Thank you very much for watching. I'll be back with another video very soon. Till then, goodbye.